$438 billion in a single quarter. I feel like I'm hallucinating these numbers. A 155% jump.
You're definitely hallucinating if you think that pace holds. Half of that surge is just Unilever throwing $44.8 billion at McCormick to corner the global market on, what, garlic powder?
Hey, do not disrespect the spice rack, but food consolidation is just the appetizer today.
Right, because the main course is Paramount somehow swallowing Warner Brothers Discovery, and I have some serious questions about that term sheet. The rundown.
I am just looking at the Q1 numbers and my jaw is actually on the floor. 155% jump.
$438 billion in completed deals. We haven't seen a first quarter like this in 5 years.
And Unilever just added $44.8 billion to the pile.
Merging their food arm with McCormick, it's a massive play for the global spice aisle.
I read that press release and I swear I could smell garlic powder. But honestly, it makes sense. Scale is everything right now, especially with the financing risk people are whispering about. Geopolitical volatility is making debt expensive, so you need these massive strategic tie-ups to justify the cost of capital.
Scale and AI. Analysts are saying AI is the direct catalyst in roughly a third of the 100 largest global deals this past year.
Which perfectly explains Ecolab dropping $4.75 billion on CoolIT Systems.
Wait, you're calling that an AI deal? CoolIT makes liquid cooling for data centers. That's industrial plumbing, Nate.
Oh, come on. Who do you think is running those servers so hot they need liquid cooling? It's the AI hyperscalers. It's absolutely an AI infrastructure play. You're just being a purist because they don't have a .ai domain name.
I'm just saying, if I buy a shovel during a gold rush, I'm a hardware store, not a gold miner. But fine, the multiple is definitely pricing in an AI premium.
Speaking of wild premiums, Danone is buying Huel for €1 billion.
1 billion euros for tech bro gruel.
Idris Elba is an investor, Maya. Show some respect.
I love Idris, but the product tastes like dusty oats. Danone is just trying to buy relevance with the Silicon Valley optimization crowd.
Hey, speaking of the optimization crowd, Gilead is dropping $2.2 billion on Ouro Medicines to grab their T-cell engager program.
Classic pharma bolt-on. Buy the science, plug it into the distribution machine. Much cleaner than Windjammer Capital picking up Precision X Group from core industrial partners.
True, but the real headline that broke my terminal this morning is Paramount acquiring Warner Brothers Discovery.
Just a monumental media consolidation. The sheer scale of the IP under one roof now is staggering.
It's the kind of deal that makes antitrust lawyers cancel their vacations.
The regulatory pushback is going to be spectacular, which is exactly what we need to unpack next. The big one.
$44.8 billion for mayonnaise and paprika. I absolutely love this market.
It's technically mayonnaise, bouillon, and paprika. But yes, Unilever combining its food arm with McCormick is exactly the kind of massive, complicated structure we've been waiting for.
It's a banker's dream. Think about the advisory fees on a near $45 billion spin merge. It's beautiful.
Look at the press release. They're calling it a global food and spice juggernaut. I call it a desperate attempt to fix Unilever's growth problem by stapling it to McCormick's margins.
Oh, come on. It's a brilliant strategic play. McCormick owns the flavor aisle. Unilever owns the center of the grocery store. You put Hellmann's and Knorr together with Old Bay and French's mustard, you have absolute pricing power over the supermarkets.
Pricing power? Nate, have you looked at the volume declines in their last 3 quarters? Consumers are trading down to private label. Slapping some high-margin garlic powder onto a slow-growth bouillon business doesn't magically make people pay a premium for soup stock.
You're missing the synergies here.
Spoken like a true managing director pitching a deck.
I'll wear that badge today. Seriously though, the distribution overlap is huge. They share the same supply chain nodes, the same retail buyers. You strip out the redundant corporate fat, and the cash flow from this combined entity is going to be monstrous.
If they can actually integrate it. I read the footnotes on the carve-out financials for Unilever's food division. It's a rat's nest of shared services. Unwinding that IT infrastructure alone is going to take 3 years and cost double what they're projecting.
You always hate the carve-outs.
Because they always lie about the dis-synergies. But fine, I'll concede the market loves it. And honestly, it fits the pattern we're seeing right now. This quarter is completely off the rails.
Record-breaking. Total completed deal value in Q1 just hit $438 billion.
Up 155%, a 5-year high, and we aren't even counting the mega deals that just got announced.
It's wild. Deal makers are whispering about financing risks and energy price fluctuations, and yet boards are just completely ignoring the volatility. They're pulling the trigger anyway.
FOMO is a powerful drug, especially with everyone scrambling for tech capabilities. Analysts are saying AI is the catalyst in roughly a third of the top 100 deals this past year.
Which makes a spice merger feel wonderfully old school. No microchips, no large language models, just $45 billion of ketchup and taco seasoning.
Don't give them ideas. They'll probably announce an AI-powered basil predictor next week.
I'd buy that pitch. But speaking of massive, transformative, and potentially messy deals.
Paramount and Warner Brothers Discovery.
Exactly. We need to talk about the media consolidation antitrust nightmare brewing right now. Voices.
So the new industry analyst report says artificial intelligence was cited as a key factor in roughly a third of the 100 largest global deals over the past year.
A third. That's a massive catalyst.
Is it a catalyst or is it just copy and paste from the PR department?
Oh, come on.
I'm serious. I read these deal rationales. Half the time they acquire a company that makes, liquid cooling systems, like that Ecolab deal for $4.75 billion, and they just slap the word AI on page 2 of the deck.
Liquid cooling is literally the bottleneck for AI data centers right now, Maya. That's a real AI play.
Fine. Bad example. But you know what I mean? Everyone wants that AI multiple.
True, but the money's moving. Though I actually thought the UBS note today was way more interesting. No AI buzzwords, just uniforms and floor mats.
The Cintas note.
Yes, UBS is calling Cintas a compelling buy. They said UniFirst's recent results basically prove there's a massive upside for consolidation in the sector.
See, this is why you used to be a banker. You get weirdly excited about industrial laundry.
It prints cash.
Speaking of printing cash, we should talk about the SBAC communications rumors. The stock is definitely moving.
Yeah, word on the street is they're actively exploring a sale.
Which makes sense for cell towers right now. But deal makers are starting to whisper about financing risks. Geopolitical volatility, energy prices spiking again. That could freeze out some of these mega deals before they even sign.
It's a totally different debt market than it was 6 months ago. The window might be closing for the massive, highly levered plays.
Which means we really need to watch how regulators handle this Paramount and Warner Brothers Discovery tie-up tomorrow. If the financing gets shaky and antitrust starts barking, that monumental deal could get very messy. Spill the tea.
So the whisper numbers on SBAC communications are getting loud, like deafening.
I saw the stock bumping up this morning. But you really think a sale is happening now?
Absolutely, the bankers are circling. Real estate is tricky right now, sure, but cell towers, that's prime infrastructure.
I don't buy it. Not with the geopolitical volatility we're seeing right now. Energy prices are swinging wildly, and you know as well as I do that financing is getting expensive again. Who's writing that check?
Private equity has dry powder, Maya. They're itching to deploy it.
Dry powder doesn't mean they want to set it on fire with 9% debt. The mega deal surge we saw in the first quarter is absolutely going to cool off.
Okay, maybe for standard deals, but look at the big catalyst right now. If you whisper the letters A and I into a pitch deck, the financing magically appears.
That's actually true, unfortunately. I pulled the data this morning. 1/3 of the 100 largest global deals over the past year cited AI as a key factor. 1/3.
See, the money is there.
But SBAC is cell towers, Nate. You can't just slap an AI label on a steel pole in Ohio and expect a premium.
Oh, come on, watch them try. Just call it AI optimized signal routing. Boom, add $2 billion to the valuation.
You sound exactly like an exhausted managing director trying to save his year-end bonus.
Hey, I know my people. I lived that life. Speaking of bankers getting aggressive, the banking sector itself is quietly having a massive year. They're on track to hit their highest M&A volume in 7 years.
Which is entirely because the regulatory doors swung wide open recently. But don't get too comfortable with the antitrust folks playing nice.
You're looking at the Paramount and Warner Brothers Discovery tie-up.
Exactly. We're already hearing the early antitrust rumblings on that one, and we need to tear into those regulatory filings next. Tomorrow's radar.
I'm keeping my eyes glued to Washington tomorrow for the Paramount and Warner Brothers Discovery fallout.
You actually think antitrust regulators are going to just wave that through?
Oh, they're going to absolutely lose their minds. But the sleeper story tomorrow is the banking sector. We're on track to match a 7-year high in bank M&A volume.
Wait, really? A 7-year high?
Yep, regulators are quietly leaving the door cracked open.
I completely disagree with that optimism. Not with geopolitical volatility and energy prices threatening to freeze mega deal financing. You're sounding like a banker with a quota to hit.
Guilty as charged? But if you want a concrete rumor, watch SBAC Communications. Whispers are getting loud that they're exploring a sale.
I'll believe it when I see the SEC filing. Until then, I'm going to go dig into the Danone and Huel deal. I need to know exactly how much Idris Elba made selling protein powder.
Send me those numbers when you find them. We'll catch you tomorrow.